income protection is such an important discussion for me to have with my clients. I specialise in helping first-time buyers, and it's really important for them to understand the implications if they were to lose their income. Not only will they miss payments in the short term, but long term it may result in them losing their property. The IPTF really helped me with having those discussions and putting fresh ideas into my mind to keep those conversations fresh as well. So regular updates on LinkedIn, as well as all of the content on the website. They actually have all of the providers' content on their website, which makes it the kind of go-to place for information. The diary from the advisors as well is particularly good. One video that stood out for me was someone who just insisted that their parents would take care of the bills if they lost their income. But over the last 18 months, how likely is that to actually happen? If parents are seeing a massive increase in their bill, and then clients are receiving a big increase in their bills, how can the parents possibly take and cover two households? It's just not going to happen. So yeah, that's exactly where income protection fits in.
Hi, welcome to day 5 of IPAW, the Friday finale. And today we're live in the studio, partly to pick up on hot topics from the week and partly to celebrate the week we've had. But that's not all.
That's right, because today we're concluding our advisor journey that's taken us from the start of the week, where we considered getting started and finding business, through preparing for effective meetings, to overcoming objections and understanding the underwriting process. So what do we have in store for today?
Well, today is all about adding value for clients. Put simply, we'll be looking at the role of an advisor once their client is on risk. An advisor's role goes beyond that point, and there are numerous opportunities, both business-wise, but also in terms of making sure that we're delivering the best outcomes for clients.
Yeah, and shortly we'll be joined by our expert panel to tackle today's topic. But before we do, IPAW works best when everyone joins in. We've really enjoyed seeing all your LinkedIn posts, but we're greedy and we'd love to see even more. We want you to tell us your because of IPAW moment. What's inspired you or made you think about doing something new or differently this week? Post it to LinkedIn using the hashtag because of IPAW, and we'll share them later.
So let's get cracking with today's topic, which is adding value for clients once cover is arranged. We've been hearing from our 7 advisors all week, so it seemed only right that we asked them what they did in terms of reviewing clients' cover. Let's take a look at what Game Plan Financial's Andy McKinney and Gemstone Mortgages' Holly Osborne had to say. So hi Andy, hi Holly, thanks for joining us today. I'm sure those watching this may well be very familiar with you both from our 7 Advisors campaign, where you've been posting regular videos showing insights into the life of an advisor. But for those that haven't seen that, perhaps you can introduce yourselves, Andy.
Yeah, I'm Andy from Game Plan Financial.
And I'm Holly from Gemstone Mortgages.
Fantastic. And just for a bit of context, how long have you both been advising?
Yeah, I actually started in March 2020 when Boris made that announcement. So it was all fun and games, had its challenges. But so 3.5 years now, been part of Game Plan. We're a firm of current and ex-professional athletes. So that transition from sport into financial services has been pretty interesting one.
Yeah, fantastic. And Holly?
I started advising in about May 2021, so just 2 years. I do both mortgages and protection, so I started more mortgages and then I got more into the protection side of things. Really enjoying it.
Fantastic. So in IPAW this week, we have been looking at the role of an advisor, taking a different aspect of the role each day. And today we are focused on the value that you can add for clients, even after they've gone on cover. So we're talking about regular reviews. And I wondered if this is something that you do. And if so, do you do it for all of your clients? Andy?
Yeah, I mean, I like to think with all of my clients that they can contact me at any time and keep that open book. So yeah, adding those additional services, but annual reviews are very, very important, just in case they've had any lifestyle changes, etc. But what I also like to do is 2 weeks before their premium would come out, their first premium, I'd like to get in touch with them again, just to say, look, your first premium is going to come out. Are you still okay with the cover and you understand everything, just to make sure they're fully in the knowledge.
Yeah. And Holly?
Yeah, so like Andy said, a lot can change. So try and do kind of annual reviews, frequent reviews, especially within mortgages. It's so easy for an advisor to be like, okay, you're fixed for 5 years, and then kind of think protection to go along with that 5 years, and then review it all in 5 years' time. But a lot can change within those 5 years, so it's important to definitely speak to them.
So that's really good to hear, and some examples of good practice there. So let's get into the detail. How do you do these annual reviews?
Yeah, so I always touch base with them via email first and say, look, it's time for our annual review. What's your diary looking like? Responses might not be there and then, but follow up with a phone call. So it's very important that we get this in the diary. Has there been any, changes to your lifestyle that could affect your current policies? And I just want to make sure that it's relevant for their current circumstances and they fully understand what insurances they're paying for on a monthly basis.
And Holly, how do you go about it?
Yeah, so to get someone in for that exact annual review isn't always easy. So I find it best to kind of put them in the diary for a little bit before a year, so you can have that conversation with them, and just also preempting it at the beginning as well, to say, okay, well, we're going to catch up in a year's time, just to make sure that this insurance is kind of meeting your needs still.
So I suspect that many advisors feel quite nervous about this, about getting in touch with clients and reminding them about the cover they've got in place. So have you guys faced any challenges when you do that? Holly, perhaps we'll start with you this time.
Yeah, so I think it is always a thing where you're worried that, okay, you might bring it to their attention and the customer will automatically think, okay, well, I haven't actually used it in a year. Do I really need it? But I think actually that's not always the worst outcome, because then you can get them in and really explain the benefits of it again, and because they might have forgotten, because it's quite natural for that to happen. So explain what additional benefits they've got within their policy, and see potentially if they need anything more.
And Andy?
Yeah, I mean, it's guaranteed that you're going to face objections from your clients. Time constraints there, and they might not necessarily want to open up that context with you again. But if you just remind them of why it's important to make sure it's relevant for their current circumstances, then you should be able to get them in the diary. And if not, if they are struggling for time, look at it in future.
It sounds like this is to be framed as an opportunity rather than an obligation. So I know this has been a topic of conversation within the 7 Advisors group. And I wondered if you'd picked up any tips or advice from the others that you'd like to share here today.
Yeah, so I'll always email and I'll call and I'll text. But one thing that was mentioned is that some people actually write a letter and send it out to them, which I just never think of anymore, because, I mean, not a lot of people do things via post anymore. Yeah. But it is, when you get a letter through the post, it is kind of like, oh, actually, yeah, I need to probably book that in. It's in black and white in front of you, and it's almost serious, isn't it?
Yeah,
so
absolutely.
That's quite good.
Yeah, I'd say strong diary management is making sure it's in there, so that notification comes through to get in touch with your client firsthand is obviously giving you a head start. Yeah. Being assertive within your language, and especially when it's with an email, it is time for our annual review. We need to get this sorted. Yeah. And then following up with a phone call, it always helps to remind that and to back it up about why it's so important. They would be my main tips for any advisors out there.
Yeah, that's great. So for those watching at home that may be now feeling inspired to give this a go, I think the most important question for everyone will be, what are the results that you've seen from doing these regular reviews with clients? Andy?
Yeah, I mean, putting the client in a better position. I mean, you always want to achieve that, with consumer duty around the corner. It's putting the client's best interest at heart. And when the results that you see is having that peace of mind and making sure that they're backed up and they know why they're invested in income protection, and if there's been a change in their circumstances, a salary increase that they're, necessarily they might be paying more on a monthly basis, but that monthly benefit's increased. And if they've had any drastic changes to their deferred period, if we brought that down, it's going to kick in quicker, then you're putting them in a much better position. So they're great results.
Yeah. And Holly?
Yeah, so Andy's pretty much said it all, but yeah, just ensuring that the customer's fully covered, making sure that as many of your clients are covered as possible, and just giving them that extra knowledge. Like I said earlier, it is easy for them to kind of forget all of the points about the cover that they've got, but just having those annual reviews, you can just highlight everything again, go through everything and make sure they're as covered as possible.
Really appreciate you both sharing your experiences here, and of course your videos are online. Thanks, Andy.
No problem. Thank you for having me.
And thank you, Holly.
Thanks for having me.
And if you want to catch up on the 7 Advisors videos, check out iptf.co.uk or our YouTube channel. You can also see the videos as they're released, along with all the other content we produce, by following us on LinkedIn, so take a look. So it's time for our panel discussion, and I'd like to introduce our experts today. So welcome to the studio, Scott Taylor-Barr from Barnsdale Financial Management,
Hello.
Naomi Greatorex from Heath Protection Solutions, and Emma Astley from Cover My Bubble. So first question today, we've just heard Andy and Holly talking about how they do annual reviews. So do you guys do annual reviews? And if so, how do you get in touch, and how do you frame the reason that you're getting in touch? Scott, we'll come to you first.
When I receive an annual statement from the insurer, that triggers an automatic letter that goes out to the client inviting them for an annual review. And we'll explain in there, have you got any questions about the annual statement that you've received from the insurer? And also, we'll give a list of some of the reasons why you might want to think about reviewing your policy. It might be that it's over 5 years old. It might be you've had a change of job. Just some little triggers to make them think, oh yeah, actually, yeah, maybe I need to look at this.
Okay, lovely. And Emma, how do you approach this?
Yeah, so we do have a bubble certificate that we send out to all of our clients, but we actually we have a process after we've arranged the insurance. So a 1 week, have you checked your documents, have you registered for your added benefits, and then a 1 month, 3 month, 9 month email, fun and interactive, just letting them know that we're always here. And then we have that bubble certificate where we very simply explain what your cover is, your term, how much the premium is, and also, has anything changed? Have you, separated from a partner, had a baby, increase your mortgage and things like that. So it's just important to reach out.
So you're definitely doing regular reviews. Can I ask what the impact that you're seeing, in fact, is in terms of retention and things like that? Do you see a positive?
Yeah,
impact?
massively. So our company retentions at the moment throughout are under 2%. And we do believe that's because of the processes, but also keeping in contact with our clients, because when they get the bubble certificate, they'll be like, oh my gosh, Emma, yes, I've actually had a baby. Do I need to change anything? Or actually I've separated from a partner. I don't need this cover anymore. Or actually I've changed my job and I need to look at actually, increasing my income protection or changing things. So yeah, it's very important, I feel, and that's why we do it with our business.
Yeah. And Scott, I didn't cover that with you. So do you see a positive impact from the reviews?
Massive. I mean, the reason I started doing it is when I first joined my previous practice, I was given a whole load of old clients to contact to do reviews. And one of the things that kept happening was they would remember who their insurer was, but they wouldn't remember who the person was who arranged that cover for them. Which is what triggered me to say, I'm going to make sure that I write to them every time the insurer writes to them with the annual statement, to remind them of that link, that this plan was arranged by this person and this is the person I need to contact.
Yeah. So Naomi, I know when we were preparing for this panel today, we discussed the importance of doing reviews, particularly with regards to the issue of indexation, which is particularly topical at the moment. So I took from that you definitely do carry out reviews, but I wonder if you could expand on that issue of indexation a bit for us.
Yeah, sure. I think at the moment with the rise of inflation, which is therefore having a massive impact on the retail price index charges that we're seeing, it is really important that we carry out reviews for clients that we've advised on indexation, particularly with income protection. I think that's important for a couple of reasons. So if you're having a rise at the moment, it could be last year it was by 10%. So that's a huge rise. And then included in that, then you've also got the factor in. So you've got the factor in, which is included, and that changes between provider between 1.2 and 1.5. So there's a number of things that you really need to be aware of when reviewing that client. Also about overinsurability. So I think certainly where you're having a conversation with the clients and they want to maximise on what they can take for income protection, you're setting that at 60%. If that policy is then going up by 10% at indexation, it's unlikely possibly that client's income's gone up by 10% in that year. And then they are overinsured. So it's a really difficult one at the moment. And I think also now what we're looking at is the alternatives to RPI, so maybe 3% or 5% rather than doing the retail price index, because it gives you more control
Yeah.
over the increases in some indexation. Not everyone offers that though, so that is again, an issue.
And Emma, would you concur? Do you find the same reason to go back to clients?
100%. Circumstances change just so much with clients, and that's why it's so important to keep in contact with them. And for that exact reason, we need to make sure that policy is suiting their needs now. So keeping in contact is key.
I guess there's a danger as well that we talk about people take out their cover, they don't know what that direct debit is that's going out every month, and then suddenly it goes up and they still don't know what it is. It's very easy to make that decision. Okay, so from what the three of you have said so far, I think we can concur, and then the audience can conclude that this is definitely a worthwhile practice. It's for a number of reasons, in terms of making sure your clients are understanding the cover that they took out, ensuring that the cover is still relevant and pertinent to them. And I guess it gives you the opportunity to cross-sell a bit as well, and talk about other products. And all those extra bits that are included with the policy, which I know we're going to come on to and talk a bit more on today. But could we touch on the role of annual statements from insurers? I know that not all insurers use them at the moment. I heard the giggle there in the room, so this could be interesting.
Contentious issue.
So not all insurers are using them at the moment. Are they useful for customers and advisors, and how do you integrate them into your sort of review process? Scott, we'll come to you first.
Yeah, I mean, as I say, it's the trigger from our end to contact the client, but I think they're vital. I mean, it's that connection, so that every year the client is receiving a document that reminds them, this is what you've got. That direct debit on your bank account that just says whoever, this is what it's giving you. And it's the insurer's chance to underscore that direct debit as important. And I think those that don't do an annual statement really do miss that opportunity to say, look what we're giving you for that 20, 30, 40 pounds a month. I think it's vital.
Naomi?
I think just because it's so different between providers, we don't necessarily pick up on the review letters. What we do instead is we reissue the advice letter that I sent. So when I'm reviewing a client, I reattach the original advice letter. I'll reattach the original terms as well. Because in the advice letter, there's obviously a getting to know your customer paragraph about, you said you needed this because of this and this. And so it's a really good way of then saying, this is what we discussed. This is what I wrote to you and we agreed we'd discuss. Have you had any of the following? And then, have you had a baby? Have you moved house? And all of those things. So it then works as a trigger, because I think, well, actually, I took this advice then. That was my need then. And
it empowers them much more to know what they said and what they're coming back to you for. Whereas if it's a general statement, they won't remember exactly what they told you.
I guess it's more generalised, isn't it, with an annual statement? Whereas if we're issuing the correspondence ourselves, then we're making it personal.
It's a good reminder. Emma, anything to add?
Yeah, we're finding that some of the insurers ones, they're so clunky, apologies, but all they do is people look at I don't know what that is, put it behind a kettle. So that's why we send out our own that are simple, easy to see, quite visual. So when a client does receive it, they know what they're covered for, they know how much it is, and that reminds them of everything, and they think, oh right, I'm covered. And then we have additional letters in there explaining, don't forget about your annual, your added benefits, and if you need us, any changes, you come back to us. And that's where we find so many clients are always coming back. But not only that, they're referring us to other people, because we're holding the hand through that whole journey. It's not about selling a quick policy and moving on to the next client. It's about being there when they actually do need us, when it comes to claims and changes, or they can't log into their added benefits, so we have to help them and guide them through that. So it's so important.
So completely on topic for today in terms of adding value for clients. Well done. Thank you all for your thoughts in the first part of our panel here. Plenty that we could say on this, but I'm going to give the others a go as well. And we're going to change topic very slightly now to think about value added benefits. So Andrew caught up with Will Merridew, Senior Policy Advisor at the ABI, to discuss the use of added benefits. So let's take a look.
I'm delighted to be joined today by Will Merridew, Senior Policy Advisor for Health and Protection at the ABI. Will, we're really interested in a couple of reports the ABI have done this year. It might be good just to start with all the things the ABI could do reports on as to what prompted kind of this focus this year in some of the reports that you've been involved with yourself.
Yeah, so I mean, as the ABI, we're broadly looking at the kind of societal impact that we can have as the trade association that represents insurance, and I think that a lot of our work is sort of trying to drive positive change based on that and our lobbying work. So I think with this, the research that we've done recently, it's kind of about basically trying to tackle some of the kind of broader economic and social problems faced by society at the moment. And I think one of the key things to come out in the last year is the workforce problems we're having. So we're facing kind of three big interlinked kind of macro challenges for the economy, where insurance has a direct bearing. So labour shortages. The UK is the only country in the G7 that hasn't come back to the same levels of labour supply since the pandemic. Economic inactivity, there are record levels of people unable to work due to health reasons, and that's getting worse. And then just a more general point around kind of poorly managed workforce health. And we think that, so there's clearly a role for insurance. These issues are holding back the economy significantly. I think that there was some research kind of quantifying the economic impact of these issues, and the kind of cost of lost productivity among the workforce is about 150 billion a year, which is a staggering amount, and I think 7% of our GDP. And on top of that, about costs to the government are about 70 billion. That's due to NHS costs, benefits costs, lost tax revenue, and insurance plays a really important role in kind of mitigating some of these issues. And everyone is looking to kind of employers and individuals to take kind of responsibility for health, on the kind of premise that the NHS can't solve everything. So there's a really important role for insurers to play in supporting businesses and individuals to kind of take care of themselves. There's consensus verging on total agreement that we need to think more about kind of preventing your health, stopping it from getting worse, and kind of acting early on symptoms, so early intervention and things like that. And these are things that we know insurance do really well. So the research is really about quantifying that and providing evidence to government for that role of insurance.
Yeah. I think that's why we're really keen to have you on, right? Because so a lot of that is almost scarily big stuff, right? And those big numbers. And obviously our main audience out there are advisors who have that individual, that all of which make up those numbers. But there's obviously a lot in that research in quantifying the value of insurance ultimately that's relevant both to government and the people you speak with every day, and the person on the street who may be an advisor. So it'd be good to, if you could share some of those key findings. That'd be really interesting.
Yeah, absolutely. And I'm gonna refer to the numbers here. So I mean, we did, I suppose to start with, we did two sort of data collections from our members who are pretty representative of the insurance industry in the UK. The first one was looking at how many people are using the health services provided through insurance. So that'll be health insurance, and obviously that exists to provide access to health services, but also income protection and other protection products that offer value-added health services. So that was one. We wanted to look at basically the scale of what insurance was providing and how many people were using it in terms of health services. And the second one was looking specifically at group income protection and the vocational rehabilitation that people could access as part of that. And through that, we were looking at the kind of work, the work outcomes. So how many people were staying in work, how long it took people to get back to work, and for what conditions they sought this help and had those outcomes. So, I mean, the kind of headline stat from the vocational rehabilitation collection was that insurance supported 9 in 10 people to either stay in or return to work. Over 50% of those cases, it's worth mentioning as well, were for mental health. So we're seeing a huge problem of mental health in the workforce, and clear value in the kind of prevention and early intervention that you can get through rehabilitation, but also the kind of support you can get to return to work. So that was a massive one. Also looking at kind of 50-plus-year-olds, I mean, there's a huge issue, again, going back to those kind of macro challenges that I think it's really important to link to. There's a massive problem with 50-plus-year-olds in the workforce, particularly over the pandemic, and some of that is due to early retirement, but a lot of it, as you'd expect, is due to ill health, because that's when your risk increases significantly. And we found that across all the conditions we looked at, 8 in 10 people were supported to stay in work or return to work through vocational rehabilitation. That includes for things like cancer, where VR is just a really important way to maintain the link between work after such a long absence normally for treatment. The kind of broader data collection about how many people are using the services, we found that the number of people who use virtual GPs through their insurance increased 5-fold by 440%. So a massive increase in people using virtual GPs. Overall, we saw, this is for health and protection, but 1.6 million people use the health services available to them through insurance 5.5 million times in 2021. So we're seeing a massive scale. And I think that what that's shown us is that insurance does play a really important role, kind of supplementing and supporting the wider health service, particularly through prevention and early intervention, which really taps into that kind of what the government wants and needs and what our society needs. So
yeah, it's interesting, isn't it? On value-add benefits, I guess, for us with our very narrow focus on income protection, it can feel like we've been banging the drum on value-add benefits and virtual GP services and things like that forever. But it is a kind of thing that gradually gains traction. And obviously some of that is push from advisors and making aware from insurers. Some is probably the challenges that NHS and others are facing. So is there anything in the report that allows you to speculate on whether that value-add benefit is likely to continue to increase around GP services and the like?
Yeah, I mean, I think so. And on that point around advisors, I mean, this feels very much like, all hands on deck. We need to demonstrate what we do as a sector to support government. So I think it's really important to establish that link, because I know, advisors will be super well versed in the benefits to individuals and businesses, but I think just to have that other link as well to the benefit society is probably really good in sort of grounding. But yeah, over the pandemic, massive increases across the board. So as I said, 5-fold increase or more than 5-fold increase in the number of people using virtual GP services. Also, just generally the number of people using all health services through protection increased by over 170%. Largely that was driven by people using services for prevention and early intervention, which I think is really where the value is. So actually stopping people from getting ill, stopping people from needing to go off. So yeah, that we expect those to keep increasing. We know anecdotally they are, but we're collecting data for 2022, and I'd be astonished if those numbers didn't rise even more significantly.
Yeah, I will admit, in the last month I've used mine for the first time, so that's
yeah.
There we go. I'm doing my bit for better or worse. Yeah, on I guess the other bit that you talked about earlier, but just to go into a bit more detail on the rehabilitation side and that. So yesterday we spoke with Monica Garcia about vocational rehab in a fair bit of detail. But again, it's interesting to kind of view this from a few different perspectives. So kind of are there any key things that make a difference in rehab being successful? And I guess specifically, is there anything that stands out that advisors can do to help, whether with employers or individuals, in making that count?
Yeah, I mean, I think there's loads advisors can do. And I think in virtue of their position as the people who really interact with customers, that's so important, because advisors are able to basically, tell customers, whether they're businesses or individuals, what they've got access to. And that's so important, that kind of educational piece, because we found that there is a big difference between the number of people who have access to these services and the number of people who actually use them. So there's a lot of potential value that's probably untapped right now. And I think advisors have a really important role in supporting their clients to use those services. And I think you see that come out in the difference between large corporate businesses and SMEs, where SMEs are much more likely to notify their insurer much earlier about a potential claim. And we've seen in our data that, we've seen first that the SMEs tend to notify a bit later, but we also see that the outcomes are better for large corporates. And obviously they're more well-versed in claiming because they have much more staff. So they're claiming more, they know how to do it. They know that insurers want to support them early, but SMEs don't, because they just don't use it as much. And obviously that'll, the smaller the business is, the less they're going to use it. So I think there's a really important educational role for advisors and in making, keeping the machine oiled, as it were, and making sure it's running as effectively as possible. People are using the services as much as they can and getting the full range of support.
Yeah, I think that's really interesting to think, both for SMEs on the group side and then ultimately for individual advisors. If you're conducting an annual review and someone's been off work for a week or two, then it's never too early, I think, is the message it increasingly comes out, to let the insurer know to ask what they can do to help.
Yeah, that's exactly right.
Well, thank you, Will. Thanks for your time today. It's always good to talk with you, and partly and genuinely to kind of get that personal view from within the ABI, and all of that is always good. So thank you for coming.
No problem.
Yeah,
it's been a pleasure.
Thank you.
Thank you.
With thanks to Will again for chatting to us about that research and the use of value-added services. But what I'd really like to do now is move from that ABI high-level world into reality, right? and where better to start than with you, Scott? So with value-add benefits, I guess they're used through the policy, but how often do you use them as a panel? But starting with you, Scott, in terms of as part of the sales process?
As part of the sales process at point of sale, very rarely. I mean, I'm a mortgage broker, so a lot of my discussions are protection on the back of a mortgage piece of advice. So there's a lot already in there, and what I've got to be careful of is how much attention I've got of the client. So between all of the sort of regulatory stuff and the stuff that's really important to do with the core benefits, that kind of uses a part time. If somebody mentions something that twigs, so a lot of the time you might be filling in an application form and you'll get to the GP's details and they'll go, "Oh, my doctor's terrible." Well, actually, with this policy, you get a remote GP service. But directly at point of sale, there's not a huge conversation about value add at that point.
Yeah, that's really interesting. Is that similar or different for you, Emma?
Total opposite in a way. I've always shouted about the added benefits and stuff like that, and we actually have clients coming through to us because they've seen a video about the GP services or the mental health support, and they want to ask more questions about it and how do they get it. But yeah, we do quite a lot on social media really about the added benefits, and we talk about that on the first call as well with our clients to understand, is that actually important to you? Because if so, I can then recommend various insurers that offer that support. Then we mention it on after sales as well, when we're sending out the documents. But go into a bit more detail, we send a breakdown because some of them are a bit faffy, or there might be 3 apps to register for, which is a pain in the bum. So we break it down and give them links on how to register, and also make videos to show them how to register and download the icon to the phone. So yeah, a lot of work, but so many clients use them, it's good.
So go on then, Naomi, you have the deciding vote.
I would say I'm somewhere in the middle, right? So I think it depends on the conversations we're having with our clients and what they're showing an interest in. So like you were saying, if clients are saying, I'm having trouble with my GP, then you would be talking about the GP services. I do think it does depend on the client, and it depends on the amount of the types of advice you're giving. I could be talking about such a range of cover already, and if it's like an add-on at that point, it just feels like the client has already switched off. So I do think you have to pick your moments with the value-added benefits. And also I think what I've seen is with some clients, we were talking about this, about being able to like log in, which is interesting you touched on that, because I've actively promoted like GP services, and clients have then got back in contact and said, I went to use it and I couldn't work it out. Like I went on, I needed a PIN, I didn't know I needed a PIN, I had a sick child, and that was the reason I was calling for there and then. And we were talking about this and saying, sometimes it's really quite faffy, and I think to understand more about that so that we can help our clients navigate the process is important, and maybe that's at review stage as well.
Yeah, no, I think that's really true. And to be clear, I think it is just that reminder to us, probably product developers or whatever, that different people use things in different ways, and that's good. That's why you do what you do. I guess in terms of the different benefits, you've mentioned GP services. Are there any others, or well, including those, I guess, are there any that you've seen connect really well with clients? Are there any that you routinely recommend over and above others? Maybe Emma, can I start with you?
Yeah, it's mainly the GP services. So many people are struggling to get in with their own GP. They can't take time off work because it can be a whole day they have to take off work so they can get to the doctors. And just all that faffiness around, booking an appointment. So they can log on a quick video consultation, they can upload photos, add information, and then they get a prescription emailed to them afterwards with a text code to go to the pharmacy. It's just, I don't know, lots of our clients are using them, and the GP services, but also the mental health support is something else that people want access to because they're on waiting lists for up to 18 months plus, especially children as well.
Any others that stand out? Or
much the same, to be honest.
Yeah.
I think the GP service is the one that is really like a standout service. Particularly, I think, when we came out of COVID and it was like, people were really struggling for weeks and weeks to get appointments with the doctors. I think that was like a massive lifeline. And I think like the providers saw a lot of that, during the COVID period, that there was a massive like uptake in the GP services. And I think people have probably started using it now and like it. So.
Yeah. And I think it's a natural thing to talk about for income protection, right? Obviously, a lot of these services are there for life and critical illness as well. But frankly, I guess it's in that space, it's in that mind space for a client a bit more. And ultimately for the insurer, there's a reason, to give these services for this product, especially with NHS delays.
Well, we've had clients who have actually, they've screenshotted how many times they've tried to ring the surgery, and they've been on a phone for an hour, a 2 hour waiting to get an appointment. And then they've actually come back and they've got through, all the appointments have gone. So it's just showing how much it is needed and why people actually want it included in their income protection or other insurances, because it is needed.
And it's the same with the physiotherapy that you often get, and the mental health support. These are services that within the NHS have got long waiting lists. But the problem is with anything medical is actually waiting is the last thing that you want to be doing. You want to get fixed so you can go back to work and not have to claim on your income protection from the insurer's point of view. But anything that can help sort of bypass that wait is going to get traction. And those are the services that I think most people resonate with when you talk about them. They're the ones who go, oh, actually, I can see how that would work for me as an individual.
And is there, if we take the fact that, bluntly, that the ABR writing reports proudly saying people are using this service more, insurers talk about this a lot, they want clients to use these services. Is there anything more that you think that insurers could be doing to get you to use these services even more, or to promote these services even more?
See, I think they can make it easier to download an app. There's some insurers out there that it's so easy to use, it's fantastic, and it's one app. So if we can try and get that, easier to use for clients, especially people who aren't techie like myself. So yeah, if they could do that, that'd be great. But I also think it's our job as an advisor to be shouting about it. There are clients, we've took them on that journey. We should be actually reminding them on what their policy has given them. It's not just the insurance, it's also the added benefits that will probably get used over and over again throughout that policy, and they'll stay then with you, they'll interact with you, and they'll come back to you. So to me, it's our job to do that.
Makes sense.
Someone might disagree.
It makes sense. I think it's a good opportunity for insurers to maybe say, well, look, we appreciate you get a lot of information at point of sale from the advisor and from us as an insurer. Maybe 3 months after the policy goes live, do we then send a communication out to the policyholder to say, oh, by the way, have you signed up for your value-added benefits? Have you downloaded the app? Have you registered? Have you got your PIN number? Because that is the issue. If you've got a situation where you've got to download an app, you've then got to get a PIN number, but to get a PIN number, you've got to send an email to an email address that then takes 4 days for them to very quickly, it loses its sparkle.
Yeah, absolutely. And I guess it maybe comes to the annual review and all of that world as well, right? But I absolutely hear that. I'm aware of time, so I'm going to bring this section to an end now. So thank you all very much for that. You're back for one more as me and Katie do a swap. So while Katie and I swap over, we're just going to share a couple of minutes of highlights from the first half of this week, so from Monday and Tuesday sessions. Thank you.
Well, this year we're seeing great demand. Our demand for inquiry is greater than pre-pandemic levels, so that's really good. you may be interested to learn that we will see in a region of 250,000 visitors to price comparison websites this year, specifically looking for income protection. So that illustrates the demand is out there, and it's not just about educating those who don't know about it.
So I would probably say the biggest challenge was getting leads. And also, when you start a business or become a mortgage advisor, you now have to do everything on social media, doing videos and trying to get your presence known online.
Yeah.
Connect with as many people as possible. You know, I've hit the ground quite hard in terms of like my networking, you know, starting with Premier Plus. I went to the Cover Health and Protection conference. Doing that, I think, has opened up the door for me in terms of exposing me to different areas of the world of protection. You know, it's not just the advice, it's everything that kind of surrounds it. And by going to the conferences and meeting these people, it's built up my knowledge as an advisor.
For me, I'm a big believer of personal brand. However, I would say that it depends on the individual, depends on the company, depends on the advisor. If you're a one-man band advisor, or you're a local figure that you want to be generating leads and being known as that individual who only does insurance and are the go-to person, personal brand is the easiest way to do that.
I don't make a decision unless it's backed by data. Before we launch a campaign, the first thing we'll do is who's our target audience. There will be some data there, there'll be some starting point for you.
The end goal is an omnipresent brand. The end goal is to be on all, but the mistake people make is they go on all first.
Let's try and move away from talking about products to more about risks and solutions. And some of the ways that firms are trying to be a bit more innovative in this area are perhaps creating short videos that talk about the concept of protection and get customers' minds thinking about, okay, what are the risks, and kind of helping them to self-identify.
You're completely removing any product discussion, no jargon. You're just dealing on a personal level with the facts and the reality of the situation, and that's really powerful.
So the way that we see, if we can get all of the information gathering before that meeting, so a full fact find completed, existing policy documents as well, it can take in a meeting sometimes 15 minutes for somebody to dig out their existing policy documents, for them to actually read the information from the document. So getting as much of that prior to the meeting is so important.
So we've just heard some highlights from the week, or Monday and Tuesday. So Monday was really around building an online presence and the different ways that you can do that, either personally or as more of a corporate brand. So I'd love to hear from the three of you how you approach this and if you build an online presence. So perhaps, Scott, we can start with you.
Yeah, absolutely. The online is where a good proportion of my business is generated from, mostly through social marketing. So I kind of specialise in mortgages and insurance for barristers and other legal professionals. So I'm on a lot of forums. I get involved in conversations with that group of people to show my knowledge and sort of, you know, interject myself into their conversations to go, you know, look, I'm here and I do this. So being online is really important. And I do that mostly personally because that's the way it tends to work best. But with the backup of, I have a pretty strong corporate online presence as well, so that whether someone goes looking for me as an individual or whether someone goes looking for Barnsdale Financial Management, they're going to come across something that looks appropriate and professional and is going to give them the surety that, yeah, this is someone who knows what they're talking about.
That's brilliant. So a bit of both then, really. So Naomi, what about yourself? You take a slightly different approach.
I'm totally different, I think, in the sense that I've never concentrated on online or an online presence. I do it's very much like a face-to-face networking, building a network of relationships with accountants, solicitors, wealth managers, and then integrating myself into different types of groups that they could be taking part in. So I attend a lot of events in London I get invited to, and we'll go to, like, I would say 2 events a week at the moment, where you're going to, you know, different topical events that you've been invited to, where people will be talking and you can be introduced to different people. And that's very much, I've been, I would say, networking since I started my business in 2014. And now I feel like I have quite a strong network where, you know, you're making a difference, and you're making like friends and contacts, if that makes sense, if that is the right way to put it. You know, lots of people now I'll casually meet for, you know, go out for a glass of wine with, as well as they will introduce business to me. So that's really what I've concentrated on. Yeah,
that's great. And Emma, which way do you lean?
We're probably more the wacky way, I don't know. So yeah, most of our business is all from social media platforms. So we've got a good following at the moment, and we do have like lots of shout outs from mums of our clients and people. But I break things down really. I've always wanted to be different. I've always wanted to try and make insurance simple, easy to understand for families, and giving them all that. The different videos, so there might be a 4-second video, but it's explaining income protection or the added benefits or life insurance, the difference between decreasing or, you know, level. And that really has helped people think, oh my gosh, I didn't know that. So we get a lot of our inquiries from, well, most of our inquiries are social media and referrals really. So yeah, I'm the one doing the crazy little videos and reels, but I just love what I'm doing. I love insurance and trying to make things different for people because they love that personal touch. Like what Scott said, it is important that they see who they're going to talk to. They know it breaks down so many barriers. It builds trust, reassurance, but also giving our clients knowledge before they've even picked up the phone or inquired with us, so we can take them on that journey easier.
Education, isn't it?
Absolutely. You don't need to sell. You don't need to do that. It's all about education. Have a bit of fun as well, and put the personal touch in, and it works really good for us.
That's great. And I think video is the way we're all going, so that makes sense. And I think actually your answer brings us nicely onto the kind of second question around, you know, you're saying you can do that education ahead of that first meeting and get that process underway. So Tuesday for us was all about preparing for successful client meetings and how to get the best outcome from an IP perspective. So I'd like to hear from each of you your top one tip in terms of kind of client preparation. What's the best thing you do ahead of those sessions? So perhaps we can start with you, Emma.
I think it might be a little bit different for us, to be honest, because our main prep is obviously the videos that clients are seeing. It's educating them already on a reason why they need insurance. So when they come through to us, they know what they want to talk about, and it's just a really good, easy conversation when we're doing the fact find with the client. So you can be over prepared sometimes and panic, but actually when a client's coming through who's contacted you, it's a better journey anyway. So just have a chat. Doesn't have to be scripted, doesn't have to be and robotic. Just be yourself and talk about insurance and just have a bit of fun along the way as well. Sounds a bit crazy, that, doesn't it?
Not at all.
Not in the slightest. In fact, pretty much exactly what I was going to say. You know, I mean, from my point of view, obviously, I'm approaching a meeting with two hats on. So I'm approaching a meeting because somebody wants to have a conversation about the mortgage 9 times out of 10. They don't even know about income protection at this point. I've got to introduce it to them and have that conversation. So my top tip is just go with an open mind, have those conversations, go down a few rabbit holes, because it's amazing when you're having that chat and someone just starts to drift off topic, if you like, and they tell you a little bit about their life and you get a little bit more colour to it, and you can go, oh, right, so, oh yeah, you're a really keen mountain biker. Actually, so am I. We have a little chat. Of course, there's always the chance you're going to become a cropper and your sick pay is only a month.
Right.
And if you break your leg, that's going to be more than a month off work, isn't it? And it gives you that detail that allows you to make the conversation specific to them rather than talking in generic terms. So top tip, go with an open mind, just have a chat, go down the rabbit holes.
No, I like that. And Naomi, anything you'd add?
I would say employee benefits is my big one, because I think when clients come to me, I regularly find that they don't really understand what they get with regards to sick pay, death in service, you know, all of those benefits. And people always overthink they're going to have more than they actually have usually. So I think, you know, when you speak to clients and they don't have their employee benefits in front of them for you to see, it's easier for them to say, oh, I think I get, 6 months, or I think I get 3 months. But if you ask them to bring the employee benefits and send them to you before the meeting, you've got the information you need to give them the income protection advice. And also, they are a little bit shocked sometimes, I think, that they found out that they only get statutory sick pay, and that they actually thought they were going to get a month or 2 months sick. So in a lot of ways, it's quite a positive way to start the income protection conversation.
Yeah, it's a really good point. And we touched on that on our Tuesday panel, and we were talking about the importance of getting that information up front and really making the client, I suppose, clear on why that's going to help and why that's going to help the conversation, why there's value in doing that bit of pre-work. I think it can help from both sides. So final question for you today, and I'm going to actually pick up a question that came up during yesterday's session. So I suppose, as advisors, you can do as much as you can do around preparation, finding the clients, preparing well for that actual interaction. But some things are out of your control, and there'll be times when a client is declined IP or perhaps cover is postponed. So I suppose today's theme is really around ongoing client engagement. So I'd like to hear from the three of you how you would treat a scenario like that, and would you maintain that relationship, and what are the benefits of doing that? So Naomi, perhaps I can come to you first.
Yeah, definitely maintain the relationship. You want to understand exactly what they've been postponed for, how long they've been postponed for, and what the future would look like on that policy. So a lot of questions would go around, okay, you've been postponed for 6 months because you've got high blood pressure. Okay, well, what we're going to do next? What do you need to do next for the client in order to make sure in 6 months' time, for example, they're ready then to apply if they're able to do so. So I think it's important to help the client understand why they've been deferred or declined, and what, if there are positive steps that they can make in order to be able to be ready to take cover in 6 or 12 months, that you've advised them of that, and then you've diarised to make sure you make contact with them at that point. I think that's really important.
Okay, thank you. And Emma, would you add to that?
Yeah, so we will always pre-underwrite a policy anyway before we even send out quotations to clients. So do that fact find out the need, and then go away and research the market to what is best for that client. So when they receive their quotations, they know if there's going to be a mental health exclusion, they know if there's going to be a rating, or or it is going to be declined. But staying in contact is key. So even when a client has been rated for the BMI, but they're continuing to lose weight, we should be always keeping in contact to do like lifestyle reviews with them, because yes, the circumstances might change in regards to the wages or the job, but actually, have they lost weight? As the exclusion, can we look to get that removed? So keeping in contact is key for clients, so that policy suits their needs. Definitely.
Yeah.
I think the only thing I'd add, I do all of that, and I think everyone should, it's exactly how to handle it. The only addition I would say is have a plan B. So there's a number of non-underwritten products that are on the market, and they're not a direct replacement for income protection by any stretch of the imagination.
Right.
But if you've got someone who's in a position where they've been declined or postponed cover and they've got no cover, you've got an option you can put in front of them to say, well, look, it's not ideal, it's not perfect, it's not as good as what we're talking about, but
for now,
it's better than nothing at all. And exactly, it gives you something for now, and then we'll pick it up again in 6 months' time or 12 months' time.
Or signposting it. I don't think there's enough signposting going on. There's fantastic companies out there who will specialise in helping people who may get postponed by ourselves, and they might have other insurers there that might be able to help. So have a relationship with other brokers as well, because that can benefit your clients. So
some brilliant tips. Thank you all. Very sadly, we are out of time, but we really appreciate you joining us today on the final day of IPAW 2023. So thank you for that. And before we wrap up the week officially, let's pass over and take a quick look at the highlights from Wednesday and Thursday of this week.
Objections aren't really objections at all. They're just concerns that haven't been dealt with or questions that haven't yet been answered. Now, if a client raises an objection, it's just that you haven't done enough to highlight the value of the plan or the importance of IP in helping them to protect everything they care about. Now, a good advisor preempts these types of objections, and as we're going to show you later on, overcome them before they even get raised.
So, objections are simply issues that you need to expand on or push back on so that the clients can ultimately reach the same conclusion as you. That IP is a no-brainer for them. Income protection literally can't be too expensive for you, because we can keep tweaking the figures and the numbers until you get the cover you need at a price that you could definitely afford. How can you object? Firstly, I always say to them, you're insuring your health for the next 30 years, not the last 30 years. Because we all get more ill as we get older, right? So I'm reminding them of that. I then break the length of the mortgage down into months. So let's say, for example, they've never been off sick. I'll say, look, the good news is, the news is your 25-year mortgage actually means you have to find the money to pay the mortgage and all of your bills every month for 300 months in a row. And you've only got enough sick pay to cover 2 of them. Are you willing to risk everything that you won't be off sick for the next 30 or 25 years?
COVID was something that we couldn't have predicted. None of us were expecting. It came out of nowhere. We all experienced it. But then when that happened, what the government did was introduce furlough. And what's really interesting about that is it was a non-expected experience and the government response was to do furlough. Now, what's furlough? It's national income protection, right? That's the way you've got to think about it.
Well, I've got 10 years of experience of underwriting essentially under my belt, know roughly what insurance would be. If I've got a medical condition that I haven't heard of before, it's a complicated mix of medical conditions, the online tools are not going to help, because Underwrite Me will just bring up a free text box, instantly. It's just going to say, refer. You have no indication whatsoever. If I can't ring that insurer and speak to an underwriter, or they won't accept an email query from me, they're not going to get the business, because it's a complicated question. Their online system is not going to answer this for me. I need to speak to a human being or email a human being and get that answer.
In summary, we're looking at an average of 9 out of 10 customers applying for IP for these 10 most common disclosures do have access to IP, and I think 9 out of 10 is incredibly encouraging.
The principle of early intervention really is that you want to help the individual very early before symptoms escalate. You want to, avoid obviously as I mentioned, the worsening of symptoms, but actually helping those individuals become aware of when that escalates and what impact it has on their function and their ability to work.
It's been quite a week. Monday seems a long time ago now, but what an advisor journey it's been. You can still share your personal highlights on LinkedIn. Remember to tag IPTF and use the Because of IPAW hashtag, the IPAW 2023 hashtag, and the Let's Talk IP hashtag. On the subject of highlights, Andrew, what has your highlight been?
Well, 2 words, right, Katie? Underwriting Thursday. But outside of that, and to be really specific, like many in the audience, I loved the approach Nicola mentioned on Tuesday, very simply removing one partner's income from a couple's budget to really prompt the then what conversation from them both. I think sometimes we can get lost in the detail, but getting that point of impact right, to me, seems to really be the most important thing in all of this.
It's a really good highlight. I think for me, it would probably be what Ash and Hayley had to say on the Monday about building a brand online and the pros and cons of taking a corporate versus a personal approach. I think that panel chat really shone a light on the work and the time needed to actually build a brand and why consistency is really important. I think social media can feel quite overwhelming for businesses, but by defining a target audience, accepting that you don't need to reach everyone, hopefully the task starts to feel a bit more manageable. And Jo, what was your highlight?
So I think obviously it has to be not wearing a cape this year. But in all seriousness, I would also say seeing our industry come together and unite behind a common cause and seeing all the great work that's going on. And talking of heroic efforts, I think we have some thank yous to make, don't we? So firstly, to our members who have been working with us since January on plans for this week, and to the networks right across the industry. I know there's going to be some people very glad that they won't be receiving as many emails and calls from me.
Yes, not just us either, Jo, but secondly, we need to thank Lansons, who are the team behind here and through the wall there, who certainly helped to make us a lot more polished than we would otherwise be. We're not quite ready for primetime TV yet, but we really are grateful to the team here for all the expertise and support they've given us and our guests.
And finally, it's thanks to you, the audience, for registering and tuning in to be part of IPAW. That's the reason we keep doing this. And what you do now is what will make the difference which we'll be reporting next year. Let's keep the momentum in the IP market. Let's make sure it's front and centre of all protection conversations. And let's make sure we keep working together to achieve those great results. Until IPAW 2024.
Bye.
Bye.